Good morning, and by that I obviously mean GM. Welcome to the State of DeFi, a weekly show brought to you by Hashflow. I'm your host, Nicole Benham. For those of you who don't know me, I am the head of community for Hashflow and the host of this show, and also the leader of the Hash Gang cult, which we'll get into later. Today we have with us Varun, also known as Gandalf the Brown, our CEO. We also have with us Ajit, who is a strategic advisor at Polygon, who is assisting the institutional and DeFi teams. Ajit has devoted the last 7 years to building bridges between TradFi and crypto. This includes building banking and payment rails for Binance and Paxful, advising crypto startups, driving the build out of the fintech practice for Consensus, and building the UK blockchain business for PwC. He's also the crypto co-host of Breaking Bank's fintech podcast and a columnist for CoinDesk. Welcome, Varun, and welcome, Ajit. What's up? How are you guys?
Thanks, Nicole. It's great to be here.
Thank you, Nicole. It's always a pleasure to be here to talk to you guys in the Hash Gang. I think I'll have Ajit steal the limelight today. All the spotlight is on you, mate.
You'll have
Uh,
Ajit what?
No, no. I said I'll have Ajit steal the moment this time.
well, I'm an investor in Hashflow, and it's in my best interest to shill Hashflow as much as possible.
So,
so I think I've been avoiding the spotlight for a bit, but it's really great to be here, and sync up with you guys on what's going on in DeFi, especially in the Polygon ecosystem. I think you guys just crossed $1 billion in volume on Hashflow, on trading volume and on Hashflow and on the Polygon network. So that's pretty awesome. Congratulations.
Yeah,
thank
it's
you.
really exciting. Thank you.
Yeah, that's pretty cool. It's bear market and you guys are growing. I've seen that in the past. Things that I was at Aave and Consensus and been in the Ethereum community for the last 8 years, 7 years now. So I've seen that things that tend to grow in the bear market tend to do exceptionally well in bull market. So congratulations. And Nicole, welcome to the Hashflow team. How long have you been with Hashflow now?
Thank you. I would say a little over a month. Varun,
Awesome.
how long has it been?
If you're counting the time we went to a Cheesecake Factory, then I think it's been like over 6 months. But
Oh
officially,
yeah, see
so
that's the thing. That's the thing. We were friends. I was friends with them first, and then I came on. But yeah, if you count our friendship, then it's been quite some time.
Awesome. I think, one of so I've been talking to Varun for a while, and I think, and I've been looking, I've been following you on Twitter, and I've seen your social media profile. I think it's great to have you on the team, and I'll buy a lot of Hashflow tokens in the secondary whenever they come out, because now you guys are a full team, and it's really going to be pretty amazing. So without much ado, I think let's do this as a back and forth. I'll ask a bunch of questions about Hashflow, and then you can ask me whatever you want to ask me, and then I think maybe some of our community can also come in and ask any questions. So let's get started. First of all, Varun, what is Hashflow, and how is it different from the other products that are out there in the market? What gap are you trying to fill?
all right, I'll start with the most boring way to define hash flow. I think the most simplest way to put it is we are a decentralized exchange protocol, and the way it works is by connecting market makers or professional market makers to takers via a DeFi native RFQ system. RFQ meaning request for quotes. So what this means for the end user is anybody can trade without slippage, and they will have full protection against MEV and front running, and they can trade any kind of asset class that is not just limited to spot, right? So which is something that is not quite possible if you go the AMM route, primarily because pricing is handled on chain. So by moving pricing off chain, you're able to build a much better price execution engine, which will be far more superior than anything you can do on chain. right? So that's basically
I see.
Hashflow in a nutshell.
So I'm assuming that most of a lot of our community here today, or otherwise, are not very active traders and or don't come from TradFi like me. So an AMM is an automated market maker, right? Which is where you like Uniswap or Sushi, where you post two-sided liquidity. For example, I can post ETH, some ETH, and equivalent amount of USDC, and then people can buy or sell from this pool where I posted these assets. Is that correct?
Yeah. I think we can take a step back here just to understand what market making means, right?
Mm-hmm.
Or how does price discovery happen in any in traditional finance or just finance in general? So what market makers are responsible for is creating or bringing liquidity to the platforms and for price discovery. A good example is let's take Airbnb as an example. So when you go on Airbnb and you're looking to rent a house or something, you essentially need somebody to list these houses. You need somebody at any given time be able to create these listings so people can rent from those people. If you don't have that inventory, then people can't really use Airbnb. Or even simple example is if you go to a departmental store, then you need someone to bring the inventory there so people can buy things from it. So that's kind of what market makers do at the order book level. But they essentially create these bids and asks. So anytime anyone wants to go buy or sell assets, your market maker typically acts as the counterparty and make sure that there's always a buy or a sell offer available so people can trade seamlessly. Now, what Uniswap or generally AMMs did is they said, let's not have market makers. Let's instead use a smart contract that does the market making, right? So what your smart contract does is it takes capital from all the LPs and then it uses that to use bonding curve, which is the math formula they use to basically determine the price of the asset, right? So the good thing about this design is anyone can throw in assets in the pool and eventually, and you'll instantly have a market for that. Now, the not so good thing about this is these may not necessarily be good markets, right? In fact, you need lots of capital for you to have like really good markets for these asset classes. As you can see, like most popular assets on these markets is basically stable coins or ETH WBTC, right? The moment you go beyond that, you generally have those markets concentrate on Binance or some other venue where there's more liquidity, and the price discovery on these platforms happens through professional market makers. So what we did essentially is we brought price discovery to DeFi by basically bringing these market makers to directly quote on Hashflow. So we went the other route where instead of using smart contracts for market making, we decided to plug into your GSRs, the jumps, the
Right,
utilities of the
right,
world.
right. So before we go there, right? So I've seen a lot of Twitter jokes and complaints about impermanent loss, and I think this is proving to be quite a useful, I think, education session for me and hopefully for the audience as well. So what is impermanent loss, and why does it happen on Uniswap? And I mean, is that something you can solve on Hashflow?
By the way, just to make sure, is there any noise from my end at the moment, or is
Yeah,
it
yeah.
okay?
There is someone shouting in your background, I think.
Huh.
But the good news is that they were agreeing with you, so just good.
Okay. Okay. If there's any disturbance, let me know. I'll try to find a different place. So,
Yeah.
uh,
So yeah.
but going back to impermanent loss, I think generally IL, I was telling other people, is basically when you deposit assets in a pool at a certain price, and then the price of that asset moves in a secondary market. But then when you decide to take the funds out of the pool, you may not quite get the same rate that you initially put in the money for. So essentially, this delta over what you deposit may be different from what you get later because of the price movement in the market is basically what impermanent loss is, right? And in
Right. So you
AMMs, it
might have
happens.
deposited $1 million and you might get back, $800,000, and that $200,000 is your impermanent loss. But it's not quite impermanent, is it?
It's not because the assumption is the price will again move back to the original price, and at some
Mm-hmm.
point you can take the funds out. But also, if you are more of a long-term LP and not someone who's short-term, just putting capital to move quickly, then general assumption is you should be okay. But at the same time, it is. I think even more simple way to define impermanent loss is it's a bad trade that you would do as an LP. basically what you're doing is you're giving your capital to a contract and allowing the contract to trade on your behalf with the taker, right? And what your smart contract does is it basically creates arbitrage opportunity for people to trade against its pool at the expense of the LP. And that is basically how AMMs work.
Varun,
Uh-huh.
can you define arbitrage?
Yeah, arbitrage is basically when you are let's say there's two venues that are trading assets, right? And if you see like the price of an asset on one venue is different from the price at other venue, that basically creates this delta, which allows people to take advantage of that price differential to buy at a lower price on a venue and then sell it at a higher price on a different venue. So this is essentially your arbitrage, where you're looking for opportunities where there's a price differential on the same asset, so you can buy low and then sell high. Right? That's the simplest way to define it.
Okay,
Right,
perfect.
right. So, so how does Hashflow address this problem of impermanent loss,
So at the moment, we are
and to what
mostly
extent?
so most market makers at the moment are using their own capital to manage their books. There is not much of the people putting in assets in a pool, but we do have a public pool model which we haven't gone like full all in on that. We'll probably scale that later down the line as market makers are more sophisticated to run something like that. But the TLDR is instead of requiring like multiple assets, you can think of Uniswap or other AMMs as an equity-based model, where basically you are putting assets in a pool and then you're buying equity in that pool, right? Uh, if you bought like 5% of the pool today by depositing 100 Ethan, 1,000 USDC, then basically at some point in the future, you're able to take out 5% of that pool, but the assets may not be the same ones. You might get a different asset, or essentially you might get a different ratio, but up to the value you put in at the beginning, right? So in our case, what we're doing instead is we get the debt-based model, where you essentially lend your capital to the market makers, and then they are using your capital to market make, and then they're also rebalancing the pool as required. So essentially what you're doing is your market makers are getting credit that they can use to market make, quote, and then every few hours, or they can basically rebalance the pools, which makes their books far more capital efficient in the sense that they don't need to park lots of capital to begin with to take the risk, and they can manage it much more efficiently, right? But the downside obviously is that you are basically lending capital to a party that could actually be risky. So that's the risk that comes with it, which is also the reason
Right,
why we've been like more.
right.
So,
And
so
the other thing that people complain about with AMMs is the slippage. So, what is slippage, and how does Hashflow address slippage? Well, this is. Did you get the
Muted.
question, or do I have bad Wi-Fi?
sorry. I was muted. I realized I muted my mic. Yeah, no. So I think slippage is again. Uh, I'll just use an example to explain slippage. So anytime uh, the price of the asset changes as you continue to buy more and more, that essentially the slippage is the delta between the price you saw at the beginning and then versus when the price and when the quote gets executed, the final price you get. So the amount of price, the amount by which the price moved is basically the slippage that you see,
Right.
right?
So you thought you were getting Ether at $1,700, but by the time you were done, if there was
Yeah,
not enough liquidity, then you would get probably $1,750, and
yeah,
that $50 is the slippage, right? So I see,
correct.
and this is probably a bigger problem for the long tail or low liquidity tokens, right? So where, I mean, ETH, WBTC, USDC pairs are probably okay because I mean, there's quite a bit of liquidity on Uniswap, but what happens to the long tail
Yeah,
tokens, some of the dog coins that I like so much.
yeah. I think the dog coins have to kind of be slipping a little too much. So you need a more rough surface for them to not slip.
Right.
So so
I mean, that was a
so
joke about the dog coins, right? But I think there are quite a few tokens where there is not too much liquidity on AMM. So I think so Hashflow, right? How many pairs? So how's the journey been so far, and what's the state of Where are you guys at in terms of partnerships, liquidity, the number of tokens, the number of chains? So yeah, so dazzle us with the statistics, please.
No, for sure. I think before I do that, let me just close the loop on slippage on
Uh-huh,
why we
uh-huh.
don't have slippage. So
Right.
generally, if you look at order books, basically the way the order books work is you have different price levels, and each level has certain inventory associated with it, right? And if you place a market order, then you buy the first level. Then if you're trying to buy more, then your order gets executed at the second level, then third level, and so on until the entire book is empty, right?
Mm-hmm.
On Uniswap, what's happening is when you trade against the curve, the more you buy, the more the price keeps going up until infinity because of the nature of that math formula, right? So as a result, you see more slippage the more you buy, but then you essentially solve this problem by having lots of capital or inventory in the pools so that you see less variation in the price as people try to buy more, right? And the price remains relatively constant. But for long tail assets or anything that does not have as much inventory, you see massive price variations because, like you pointed, lack of liquidity or lack of inventory.
Mm-hmm.
So what Hashflow is doing differently is basically we follow the RFQ path where we basically have custom tailored quotes for every taker. And then once you cryptographically sign that quote, then, no matter what happens, this user gets the entire quote at the price agreed upon. It's almost like an OTC trade. So the reason people do OTC trades is to avoid this exact same problem. And you can think of Hashflow as an OTC on steroids, where people can just go request a bespoke quote and then execute that without having to worry about slippage or even front running and things like that.
Got it,
So
got it. So yeah, so time to shell. So razzle dazzle us with the statistics. What's going on with
statistics.
Hashflow? How's the growth been? How's your journey been so far? How many users? How many trades, volumes? How many pairs? How many tokens? Just tell us everything.
Absolutely. So far we've launched as a beta last year, or alpha rather, in September of last year, and have traded about nearly 9 billion now. Daily volume is somewhere in the 25 to 30 million range. So it's decent. There's obviously a massive room for improvement there. We are on 6 different EVM chains at the moment: Ethereum, Polygon, Binance, and then Arbitrum, Optimism, and AVAX. And we just finished trading 1 billion volume on Polygon. So I think
Wow.
that was the big moment why I decided to have this space with you guys, because I felt
Mm-hmm.
like Polygon
See,
is
I
like a
told
massive,
you. I
massive.
told you in the beginning that Polygon is where
Yeah,
the action is going to be. Right.
I know. So yeah, we're gonna ask you just to tell us about Polygon as well. What's happening in the Polygon world. Nicole has some questions too, I reckon.
Yeah,
Sure,
Ajit,
sure.
we have a ton of questions, but yeah, start with what's happening in the Polygon world.
What's not happening in the Polygon world? After Ethereum, Polygon is by far the biggest ecosystem across DeFi, NFT, gaming, and the buzzword metaverse applications. I think let's start with gaming. Gaming has been with Ryan Wyatt's team in Polygon Studios, gaming has been an exceptional success story. I don't have all the metrics on my fingertips, but we got recently we got like pretty much 48 of the Terra apps. I didn't know there were 48 apps on Terra, but they all came to build on Polygon. The team were in Korea recently, and the reception was just exceptional. I didn't know that the Polygon was such a big brand in Korea, but it turns out that the brand is now pretty global. And the reception of the Polygon team, Asif and some of the other guys were there, was pretty exceptional. So the growth of the ecosystem globally has been phenomenal. There's just the maximum number of games. There's a huge amount of traffic that's coming from Web3 gaming. It's been quite a growth area. Sort of kind of, I think, proving Sandeep and Ryan's conviction that gaming will be a massive growth area for Web3 applications. Then on DeFi, I think our philosophy is quite simple. We are building the most composable ecosystem, and Hamza, Asif, and some of the guys in the team, Hamza leads the DeFi team. So they've been essentially trying to get every single app, right? So if any new any innovation happens on Ethereum, it should happen on Polygon. And sometimes, innovations should happen on Polygon when they're easier to do on Polygon as opposed to on layer one. So that's going really well. I think we've seen some structured products being built on Polygon. There is a very large hedge fund. I can't just name them yet, but they're building a principal protected note on Polygon. So this idea of bringing more institutions and bringing more TradFi expertise with the DeFi ethos to create DeFi applications that make more strategic sense, just like Hashflow. Right, historically, DeFi has been a place where people go to earn, farm, and dump free tokens. Like liquidity mining was a huge success story. I think Compound and Aave did a phenomenal job. So did Uniswap, but I think that story, kind of lived out a bit, and then DeFi 2.0 came around, and Olympus folks and all of these, Fei protocol controlled value type of narrative didn't really take off. So what we are seeing now is sort of more, I think, TradFi expertise come into DeFi and start to solve some teething problems around, for example, how to create sustainable yield. We saw TimeSwap. TimeSwap is a very interesting protocol for borrowing and lending. So I think that's something that the audience should look into very closely. But I think more on the TradFi side, so structured products are I think there's a fork of Ribbon that someone is building and trying to improve on the option strategies. That's pretty cool. There are we've seen a team from a hedge fund start to create something quite sophisticated in terms of quantitative strategies. Now, quantitative strategies have leakage or decay in terms of once the market figures out quantitative strategies, then you kind of have to switch to a new strategy. So they're trying to solve a couple of those problems in DeFi on Polygon. So I think so that's the DeFi bit, and then you've obviously seen the NFT launches. There's a whole bunch of DGen NFTs, Web3 native NFTs, corporate NFTs. You saw the Disney announcement. You saw the the Macy's announcement, the Coca-Cola announcement. There is quite a bit of Web2 and corporate interest. So in the Web2 space, Polygon has been winning quite a few inbound and outbound deals, especially in certain major geographies like the United States. But I think the big story this year is, so on the ecosystem side, Polygon team have always been known for doing an exceptional job. But this year, the story kind of pivoted from, just building a great ecosystem to building great technology also. So, Polygon acquired Hermes sometime last year. And I think since then they also acquired Mir Protocol, and Zero. So all of those are now, branded as Polygon ZK EVM, and the goal is to, with sort of the Hermes has come a long way, and they have built the fastest open source proving system for zero knowledge proofs, and what they're trying to do is build fully EVM compatible ZK rollup. Now that's a huge achievement. That's very, very hard to do, as Vitalik mentioned in his blog. But I think it's quite remarkable that Hermes team, with sort of Polygon's focus and investment, has come such a long way to build a launch a testnet for fully EVM compatible ZK rollups. It's a huge achievement, and I think what that means is applications like Hashflow, Aave, Uniswap, Maker, whoever. I think all of these apps can essentially be ported onto a ZK rollup sometime next year without too much additional testing or debugging. So there's quite a bit of work to be done on the on the testing and security of the ZK rollup itself, ZK EVM itself. But I think once that's done, then the migration path for DeFi and other dApps onto the ZK EVM becomes painless. Which that's a huge achievement, as compared to competitors like Starkware, you had to kind of learn Cairo, which is an entirely new language. Then there are other rollups that have a bit more limited coverage. So you kind of have to, let's say you deploy Aave on something on one of those rollups, then you have to do a lot of testing. You have to change your code, and then you have to do a full audit from the beginning. And that kind of is a pain for developers and is a major barrier to entry for protocols. But I think with the fully zk EVM compatible, fully EVM compatible zk rollup in Polygon zk EVM, and it's a massive technical achievement. I mean, I've been looking into the details of how it works, and it's a huge technical achievement. So that's going to be the biggest. I think that's the biggest news of the year, apart from then there are other projects like Polygon Supernets. I think there'll be things like which are similar to Cosmos zones, if you will, and there will be at some point what will happen is that Polygon will be a general purpose set of scaling solutions for Ethereum, which means that people who want to deploy app chains don't have to go to Cosmos or something else. They can essentially simply deploy application-specific rollups on Ethereum using a combination of the Supernets technology and the zk EVM technology, which is a pretty big deal, right? Because if you can create synchronous and asynchronous composability across these applications, then you've kind of solved the big problem or a whole set of problems which require multiple trade-offs for developers to scale and compose applications across the Ethereum ecosystem. Now that's much harder said than done. I think that's a 2-year exercise, but the zk EVM is already in testnet, and it should be the big first step. And Supernet should also come out this year. So huge shifts going on in the Polygon core tech.
Ajit, you just answered like 10 questions in one breath. Like I just skipped 10 questions because of how comprehensively you answered the first question.
Thank you. It's goodbye then. I'm
sorry. Okay. So my other question is, how is this different from zk Sync?
Yeah, so first of all, zk Sync's prover technology is not open source, right? So no one really knows what's there or what's not there. I think then zk Sync historically haven't been targeting a fully EVM compatible zk rollup. They started early, and I think the technology has come a long way since. And some of the research that the Polygon team have done around Plonky 2 and prover systems has really surprised the market a bit. So zk EVM, so zk Sync isn't fully EVM compatible. The prover isn't open source, right? And I think they're a very strong team. So we'll see how zk Sync evolves, but that's kind of the state of the market right now.
Ajit, but by the way, I was going to add, it might make sense to maybe give a quick snapshot of what's optimistic rollup versus a zk rollup, and why is this even a big deal? Like, why having a EVM compatible zk is good, because it wasn't quite possible.
Yeah. So let's start with Ethereum. Right? So Ethereum is the winning ecosystem so far. Ethereum is transitioning to proof of stake, in 2 weeks or maximum 3 weeks. So what that does is essentially it reduces the energy footprint of Ethereum, but it doesn't actually solve the scalability issues. And historically, Ethereum's roadmap has evolved as the technology has evolved, and now the entire focus from a scalability perspective, Ethereum is going to scale through rollups. Now, what are rollups? So what that means is, at some point, Ethereum might offer sharding, which means there are multiple partitioned, which means, well, I think there's a lot of I want to be careful with how much how many buzzwords I throw in here. But Ethereum will scale in 2 ways. Ethereum in the long term will have sharding, which means there will be multiple partitions of the Ethereum network, which kind of have their own local consensus, so to speak. And then, but in the near term, Ethereum will scale through rollups, right? So there have been other technologies in the past, like Polygon's Plasma, Polygon's sidechain, or Plasma, or other things. But now the entire focus is on rollups. Now, what do rollups do? So when you execute a number of transactions on Ethereum, then Ethereum is a shared resource. There is only so much block space or space in the blocks in the blockchain that's available for transaction data and other data to be written. And there's a lot of compute involved in smart contracts processing all of those transactions. So what rollups do is they take the workload of entire transaction processing, right? So all of the compute and some of the data. So a lot of the compute happens on rollups, which are their own blockchains, right? So a rollup is like its own blockchain. It does all of the transaction processing on its own. It handles most of the data, not all of the data. And then it essentially, and it processes all of these transactions in batches. So you essentially take a bunch of transactions, create batches, you process all those transactions away from Ethereum. So you take a lot of this workload, right, whether it's compute or data off Ethereum. And then at the end of all of this, you write a proof to the layer one or Ethereum, where you say, look, all the so you can have two types of proofs with zk rollups. The proof you provide to Ethereum is that all the transactions were processed correctly, and the state of Ethereum of layer one is being changed correctly, right? So that's what you call a validity proof. So validity proofs are instant, meaning you once the batch of transactions is confirmed in Ethereum, then it's confirmed your money is ready to move. You don't have to wait for a few days to move your money. Which means it's more capital efficient and so on and so forth, right? So zk rollups are kind of the bleeding edge and kind of the final state of scaling Ethereum on layer twos. Now, optimistic rollups are easier to build. It's much easier to achieve EVM compatibility by writing optimistic. But the reason they're called optimistic is because you kind of say, look, we will assume that the transactions were processed correctly, but if something went wrong, then we'll give people a few days to provide what's known as a fraud proof. So which means that there was either an invalid transaction or it wasn't the transactions weren't processed correctly. So optimistic rollups are easier to write, but the problem is you have to give people a lot of time to provide fraud proofs, which means you can't actually withdraw your money for a few days. There are workarounds for that. But so zk rollups are much harder to build because they involve a lot of math, zero knowledge cryptography, scaling technology, whole bunch of computer science. But once they're done, once Polygon zkVM kind of goes live, that's almost the final state of then we can optimize a bunch of things around sequencers. We can optimize a bunch of things around prover technology. There's a lot of cryptography that can be improved. But that's kind of the final state of scaling Ethereum on layer twos, right? So this is a huge step, and that's why it's such a big deal.
Wow. I actually just got a DM from someone who said, "Can you describe cryptography?"
Yeah. So crypto, before there was cryptocurrency, there was cryptography, and so cryptography has been around since people have tried to pass secrets, right, to each other. So, for example, suppose you want to send one of your colleagues an email without your boss, and the email is about where you're complaining about your boss, but you don't want even if your boss sees it, you don't want your boss to realize that they're complaining, right? You are complaining about them. So anyways, Alice and Bob are the two people who are mentioned in every cryptography lecture. And what they're doing is they're trying to communicate with each other without someone who is kind of overhearing this message and trying to understand what they're saying, being able to understand what Alice is saying to Bob, right? So Alice is talking to Bob, but she doesn't want Charlie or C to figure out what Alice is saying to Bob. So all of these techniques are considered cryptography. And blockchains are built entirely on what's known as public key cryptography, which means that you have a private key and a public key. Your private key is used for signing transactions, and your public key is used for verifying your transactions. And then and if someone wants to send you an encrypted message, they can use your public key to encrypt the message, and you can use your private key to decrypt the message. So encryption and digital signature schemes are kind of in asymmetric key cryptography are essentially mirrors of each other, and blockchains are built on it. So now when we say crypto, we generally mean cryptocurrency, but for centuries before there were cryptocurrencies, there was cryptography, and and cryptocurrencies are a very, very small part of the discipline of cryptography in computer science and mathematics.
Thank you, Ajit. I hadn't heard it described in that way, and I didn't know about Alex and Bob either.
Alice and Bob, yes, Alice and Bob are the most fun people in math.
That's great. I'm never gonna forget that one. I wanted to talk about Polygon's story and what contributed to such a massive success compared to some of the other L2s and side chains in terms of adoption.
Yeah, so I mean, I've been, formally associated with Polygon for the last 3 or 4 months, but I've known Sandeep for the better part of, since 2020 Jan, and I met Sandeep at a Binance event where, he was talking about Polygon, and in that conversation, I said, all right, this is this is a special founder, so I need to put in a bunch of money in this, and I think I've been very happy for it. So I think Polygon should get a lot of credit. I think a lot of credit for Polygon's remarkable success goes to the founding team, and it's quite a balanced founding team, right? So often you see founding teams where you have good engineers but no marketing skills, and then sometimes you see, or biz dev skills, and sometimes you see teams where there's a lot of shilling capability, but not the ability to build and keep your head down. And sometimes you see both of those. As an angel investor, you see both of those, but you don't see the drive to, for just doing great things and a huge vision for going where things can go. So I think what's really worked for Polygon is really the combination of the technical chops, but also Sandeep's exceptional ecosystem building skills. Also, I think more recently, it's been just some remarkable hires. I think Polygon has been very fortunate to have some exceptional individuals from Web2 join. Ryan Wyatt, I think in Polygon Studios, is often you see Web2 people come into Web3 and they don't get it. But Ryan was hanging around NFT discords, and he was essentially degenning out, and he was hands-on before Polygon found him. He found Polygon. So Ryan has built a great team in studios, right? That's got sort of the right ethos. They understand the Web2 space and the Web3 space. And Ryan in particular, right? So I think and then Mudit joined to work on security. So it's really the people, but I think it's on the founding team. It's just a remarkable drive. There was a time when Polygon and XDAI were neck to neck, and then I think Sandeep, in his unique, very aggressive, driven ecosystem building approach, sort of did this partnership with Aave, and I was at Aave at the time, and so that sort of kicked off the entire ecosystem incentive season, which everyone has copied since. So Aave coming to Polygon was a major step in the history of Polygon. So I'm quite glad to have been part of that story, and I think we did a lot of testing. We realized that the tech was robust and it was ready to go. So since then, I think the DeFi ecosystem exploded. But the biggest reason for the success of Polygon is really the community, right? So, and the community is the Ethereum community. So when Binance Smart Chain and some of the others, L1s, were essentially stealing a lot of Ethereum's market share because Ethereum wasn't quite, was getting too many transactions on Uniswap, OpenSea, and elsewhere. I think Polygon came in at the right time, and while everyone was essentially shilling this ETH killer narrative, right? So Avalanche, everyone else, Solu Navax narrative and ETH killer narrative. We're going to kill Ethereum and we're going to do something better than Ethereum. Sandeep and team took a very different approach, and they said, look, we are part of Ethereum. We are Ethereum's biz dev team, right? We are here to scale Ethereum. We are committed to Ethereum. So I think what that did is that's given Polygon a huge amount of support from the biggest innovation ecosystem in crypto, and that's Ethereum. So and I think that's not just been words. I think Polygon, I know Sandeep very well, and Sandeep and the rest of the team have been extremely committed to Ethereum, even sometimes at a cost to Polygon, right? So that sort of, I think, integrity and just the clarity in terms of knowing where you belong and what your A team is, and that's really the Ethereum team. I think that's Ethereum community has backed Polygon, leading to exceptional success.
Ajit, thank you so much for that. I wanted to take this in a different direction. You have a background in traditional finance. How do you see the institutional flow of DeFi? And also, what's the traditional finance view on DeFi and its development?
Yeah, so I think there is a general. So I've been in crypto since crypto was purely revolutionary, mostly anarchistic, and 100% degen. And in every bull market, last bull market we saw a lot of TradFi come into crypto, and there was this whole buzz about enterprise blockchain, and building these consortium systems, and building all these private blockchain systems with banks and exchanges and so on and so forth. So, and this time we are seeing Web 2, Google's, Facebook, Instagram, all these guys come in. And so there is a bit of a mixing of the ethos, right? So part of the challenge, when you think about DeFi, when I started with Aave and was also looking at ETHLend for potential investments, a consensus, that was a bunch of young folks degenning out and really trying to start a revolution. Oh no, KYC, it's going to be completely permissionless. We don't worry about regulators. So that was the ethos. Whereas in TradFi, the ethos, after the financial crisis is, oh, we need to ask for permission before we do anything. We'll make an announcement that we are launching the digital assets team at this mega bank, and then we'll see if we actually do anything, right? So the ethos in TradFi, the ethos in Web2, and the ethos in crypto are actually quite different. But all of these are now merging. So what I think we're getting from, but a lot of TradFi people are very frustrated, right? I mean, I still have PTSD from building blockchains in banks and some very, very large projects, because you kind of crack your head and nothing actually moves. And then even when it moves, then there are lots of people whose jobs are being threatened by the innovation, and they try to kill it. So I think a lot of TradFi people who actually want to make a difference and invent things and create new, things, essentially are frustrated, and they want to come to DeFi, right? So because when I was doing SecDB at Goldman, we could make code changes in production just like DeFi, and we could innovate, we could create new financial instruments. But after the financial crisis, it's not been the case. So it's the best people in TradFi want to work in DeFi, and that's bringing a lot of talent and expertise. I mean, obviously, there are some challenges in the sense that people tend to worry about some of the risks in DeFi, and I think there are two sides to the freedom in DeFi. I think some people like Aave, have done an exceptional job of using it to innovate, and Hashflow, and other people have kind of done other things with it, which don't give the space a great name. So I think, but at the same time, what's coming in from TradFi is a lot of expertise that didn't exist. When you're 24 years old, 25 years old, you probably don't have the deep product knowledge that somebody from a hedge fund after 10 years of extensive trading and derivatives trading has. So I think we're getting all of that expertise into DeFi, and a lot of those people are now working with, partnering with Polygon from inside their firms. Firms like Brevin Howard, firms like SIG, firms like Jump Crypto. There's lots and lots of different firms that are bringing all of this expertise to build lots of very interesting ideas and explore a lot of different ideas. And DeFi is also changing the culture inside those firms, because people are essentially willing to experiment. They see the risk, but they also see the opportunity. So I think we're living in very, very exciting times. But then we also have to prepare for more interest from regulators. I think we saw what happened to Tornado Cash. We know what Mr. Gensler essentially taking a lot of interest in the space. But at the same time, I think what the message from, Polygon just hired one of the best lawyers in DeFi, Mark Boyron, as the chief legal counsel. And he and Rebecca Rettig have worked together for a long time. Rebecca is the general counsel for Aave. And these guys, I think, are doing a remarkable job of essentially, telling the regulators and the policymakers that, look, Celsius went down, Three Arrows went down. We've seen all these unstable CeFi firms fail, but we've, DeFi blue chips still humming along. So something is very right. about this transparent open system that we're building in DeFi. And I think this dialogue, is where I spend a fair amount of time as well. So the future is great, but it's going to go through a bit of we have a lot of work to do, and it's going to be a very interesting journey.
Well said, Ajit. My last question, and I do see a ton of people, I come from the NFT space and I moved over to DeFi, and my curiosity sort of led me there. But, there are a lot of people who still ask the question, why DeFi? What's the incentive for them to move over? And how do you answer that question? If you're talking to someone who knows nothing, doesn't even come from traditional finance world, what do you say to them?
Yeah, because TradFi doesn't work, right? I come from TradFi and take my word for it. If you don't take my word for it, then let's explain why TradFi doesn't work. First of all, TradFi fails regularly. We've seen, routine financial crises. Even last year, we saw, Archegos fail. This year, we saw Celsius. I mean, these firms are TradFi, right? So if anyone thinks Celsius is not TradFi, I don't know. I mean, you just give someone, a banker, your money, and then they do whatever they want to do with it. Maybe they're buying Bull Run Babes NFTs, as we found out. I think, so that's TradFi, right? There is no transparency in TradFi. You don't know what's happening. You don't know what people are doing with your money. There is a South Park skit that you should watch that came out yesterday, and da 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 da. You give me your money, and the money it's gone. So I think TradFi doesn't work. Most of all, TradFi doesn't work for the average individual, right? You could challenge and say, look, so many things go wrong in DeFi, but at the end of the day, I think we're building jet engines. We're building an entirely new infrastructure for the global financial system, and it's in its very, very early days. So when you're innovating at that level, some things can go wrong, and we have to build a better system for sure. But I think what DeFi promises is a few things. One is transparency, right? So everything that happens on chain. So I don't consider Luna, for example, or Anchor Protocol DeFi, because Mr. Kwan was making whatever decisions he was making. There was no governance. A lot of things were happening behind the scenes. So transparency and on-chain decision making, decentralized governance, community participation in knowing what's being built and how it's being built and why it's being built. That's core to DeFi. The other thing is automation, right? So in TradFi, you have massive costs because tons and tons of things are done manually by people, and then who's paying for it? The customer is paying for it, right? So all of the compliance risk, all of these costs are being paid by you. So I think DeFi promises automation and a lot of efficiency. The third thing is innovation. I think TradFi innovation really died after 2010. So now we are starting to see people start to create new things all over again, and by combining a bunch of technologies, especially blockchain and crypto, with a lot of expertise from TradFi. So there are lots and lots of reasons, but I think if we can create a more efficient and transparent financial system that works for where the costs of both systemic failures, right, like systemic failures like Three Arrows and Celsius, and not just Goldman and Barclays back in the day, have to be paid by the average individual, then I think that's what we are really here for. Now, in the meantime, obviously, balancing the realities of some of the attacks and hacks and rug pulls, and making sure that we differentiate between responsible innovators and all the other opportunistic folks is really important. But at the end of the day, TradFi doesn't work. That's why we need DeFi.
Wow, what a mic drop moment. Varun, is there anything that you want to add to what Ajit has said?
No, I think Ajit gave a pretty thorough summary of everything. I like the line "TradFi doesn't work. That's why you have DeFi." So closing
Now,
remarks.
I have some
Go on.
questions. Sorry.
Yes.
Yeah, I
Go
have
on.
some questions. And Nicole, these are for you. Sorry. Yeah, so Nicole, what brought you to Hashflow?
So I met Varun a while ago at Chris Dixon's house, and we became friends there. And I didn't know anything about DeFi at all, or why it was important. I wasn't really trading too much, and I started to use the product. and asking questions. And then I showed it. It's funny. I showed it to my mom, and my mom started using it. She was super impressed. And I grew closer and closer to Varun and Vinod, and they explained so much to me, not just about Hashflow, but about the space, and and how we're gonna move forward, and the new developments and things like that. Um, I would say it was my curiosity that led me to this role, and the other thing was, um, I was a little intimidated by this space at first because I felt like I couldn't really understand it. And so as I started doing Twitter spaces and interviews and talking to people, I would get a lot of messages that were like, "Hey, this really helped me," or "Hey, thank you for asking that question. I was too shy to ask that." And I noticed that what initially I felt like might have hindered me, or it might have been a setback, that I wasn't from the tech world, or I wasn't, I wasn't, I have not been in crypto for too long. That that actually gave me an advantage, because that way I was a bridge for people who knew nothing about it. And that's why you can see in the questions that I ask, I'm not, I'm not just talking to people that have a comprehensive understanding of DeFi, crypto, blockchain, NFTs, any of that stuff. Like I'm talking, I'm asking questions for people that essentially know nothing or very little, because eventually, as we inch towards mass adoption, those are the people that we want to attract. And so I'm
Absolutely.
implementing, yeah, and I'm implementing educational efforts with Hashflow, and all sorts of stuff. But that's basically my role.
All right, I've never been to Chris Dixon's house, so I hope you guys can take me there one day. But moving on from there, so you're absolutely right. I think we do need to translate this technology and our products for the average person, and I think it needs to be safe and easy for them to understand. So how do you see the community today, and how do you want to see the community in the next few months, the Hashflow community?
I think the community is strong. They obviously ask when token very regularly. Um, but
Yeah, I'm an investor, and I was planning to ask. So
were
when
you gonna
token,
ask? Hilarious.
yeah,
Um,
can the devs do something?
yeah, I'll pass that message along. Um, I think the community is strong. It can be stronger, but I really just want, um I really just want to bring people together, and address concerns, and create, the sort of culture I see, or that I saw months ago in NFTs, like really excited, kind of a
Hmm.
revolution, has a culture to it. That type of stuff excites me. And
Yeah, we had that in DeFi summer in 2020. Where everyone was really getting excited about what's going on, what's going on with Aave, what's going on with Uniswap. So I think we need to bring some of that back into DeFi, and if you can do that, that'd be pretty amazing. So that the first step on that is awareness, right? So how many people already know about Hashflow, and what's your plan to make everyone aware that there is such a great product out there that they should be using?
yeah, so that's where the education comes in, because I feel like the easier you make it, and the more accessible you make education, and the simpler you can make it, that's where you win. Because there's no better way to attract people into the space than to make it simple for them. The second you start getting technical, and that's why I ask so many clarifying questions, the second you start getting technical, or I don't hear people talk about this a lot, but also getting condescending. You know what I mean? Like,
Mm-hmm.
you know so much more than I do, very frankly. Varun also, when I was getting to know him, I really felt like he was educating me, and continues to educate me on all things DeFi. Zero, like, and there are some other people, when they talk to me or they talk to other users, they're almost like, oh, they have that tone of like, why don't you know this already? It's like, no one knew about, I didn't even know about this a year and a half ago. So calm down, you know? So that I think understanding people on a human level and realizing that this takes time and also like identifying the problems that we have in our systems and then positioning DeFi, and it's not positioning, it quite literally is a solution to many of the problems that we face in traditional finance and
Yep.
other arenas. So once people realize that, it incentivizes them to learn about it because, hey, guess what? You benefit from all of this. So that's really the mindset I have with everything here. And also I talk to a lot of people in the community. People DM me all the time. I'm sure you saw in this room.
Yeah, I saw you have like 107K Twitter followers. I'm very jealous of that.
But not just that. I mean, people will message me questions. Someone messaged me during this Twitter space a question. I asked you immediately, like, I care what people want to learn. I care what people are concerned about. I care what people want to know. And I'm here. That's my role as a community leader. So that's that's what I do.
I think that's phenomenal. That's the way you said it. It's really authentic, and that makes me even more bullish than I've always been on Hashflow. I think it's really important for us to, because the reason we are doing it, right, I mean, if we're not doing it to make a better system for the average person, then we should just go home. But I think that's why we're doing it, and I think translating it and kind of making it easy for people to understand what's in it for them. I think that's phenomenal. So that's really well said, and I think we are close to an hour now. So unless if there's anyone in the audience have any questions in our community
Ajit, I don't even
for
know.
Varun.
I don't even know if there's time for community questions, but we'll have to do this again. I would love to speak with you separately and maybe set up another space. And
For sure.
I'd love to at least listen in on your podcast, because I mean, everything that you're
Yeah.
doing, just blown away.
Yeah, no, we're going to be doing a GameFi episode with Ryan Wyatt on the Breaking Banks Global podcast to talk about games and GameFi. He's ex-CEO of YouTube Gaming. Ryan runs Polygon Studios, and he's kind of one of the people who has really built a Web two, one of the biggest Web two gaming businesses in the entertainment and media industry. So phenomenal person. We'll once we record it, I'll circulate it, and we'd love to have you guys your feedback on that as well.
Varun, any closing words? Oh no.
I think Varun is in the United States, and they sometimes have bad Wi-Fi, even though they kind of invented the internet over there.
Well, on behalf of Varun, thank you for being here. This has been
Thank you so much.
the premiere episode of the DeFi State with Ajit Tripathi. Thank you so much for being here. And
Thank you so much, Nicole and Varun.
We will see you next week. Thanks, guys.
Have a wonderful evening. Cheers. Bye.